All right. Good morning, everybody. Today is Thursday, January 30th. Um, and this morning there was an entry for US 30 based off of SAR levels rejection. And I actually am in that trade. So you can see how this is pumping up. So this trade came up before New York, right? So I mentioned to you guys that these trades will come, sometimes we'll get these trades before New York session, which is why you need to know how to apply the strategy or take them. So, I mean, this US 30 buy and literally had no drawdown, if you can see my entry here. So let me just go ahead and replay this real quick just to show you how I entered this particular trade. So here what we had, there was creation of there was creation of let me go back one bar. So there was creation of three SAR rejection levels, right? So there was creation of one and then two more, which were created on my entry candle. So here it the confluence. So if I put the confluences here to the side, let me see, where is that? Uh, where is this? So the confluences for the trade. So you have confluences right there. So this is a trend, this is a rejection entry, right? So there was a rejection off of an SAR level. So if I play the other candles, you'll see where those SAR levels were. And then since this was a buy, if I'm buying, make sure I'm in a green zone. If I'm selling, make sure I'm in a red zone. So when I turned on the zones indicator, it shows that we're in a green zone. So we're in an area of demand or we're in an area where buyers are seated. Then what's the third confluence? If you're buying, make sure there are no bearish order blocks around your entry. If you're selling, make sure there are no bullish order blocks around your entry. So when I turn on the order blocks indicator right here, the markups indicator, which is already on, you can see the nearest order block. We have a daily bearish low order block at the like 80% of our TP. And then we have a weekly bearish low order block, which is about 50% of our stop loss. So knowing this, actually for this trade, I wanted to go for like a 100-point TP and stop loss. However, if I did that, you can see that my stop loss would have been, yes, it would have been below this at the previous low. However, I did know that there's a weekly bearish low order block there. So which would mean that it's possible that price would come here, stop me out, and maybe reject off of this 4-hour buy or 4-hour sell SAR level. So at that point, I had a decision to make, which I mentioned to you guys yesterday. If there is no order block between your TP and your stop loss, you have a decision to make. So if we had like a bullish order block somewhere below here, then I could have maybe moved my entry to the bullish order block. However, since we didn't have any bullish order block between the TP and the stop loss, my decision is that I needed my stop loss to be below this weekly bearish low order block, below this rejection area, and possibly even below this other rejection area down here. So at that point, I decided to go for the only entry, or the only thing that would have satisfied this is a 250-point TP and stop loss. Now, it seems a bit wide for this, but for US 30, 250 points is especially when there's liquidity, it's nothing. So you can see I set my pending order here. When I play the next candle, you'll see, because you also ask yourself which is the most optimal area. So here I think the SAR levels have changed, have adjusted. So we had three SAR levels here. So we had one here and then two here. So my pending order was at the lowest SAR level, which was right here. And when I set that pending order, price came and tagged me in exactly at that place. And then I'm currently in this trade. Now, the issue with having a wide TP and stop loss, a wider TP and stop loss, especially in this instance, and I mentioned to you guys yesterday, you also want to consider where your 9 EMA and 200 EMA is. So currently you can see price is struggling to get past the 9 EMA. However, right here, I do know we have this hourly buy SAR. So I do see price coming up here before rejecting to the downside, coming up here, spiking a little bit, and then coming back, maybe right using this daily bearish low order block before coming back down. So yes, 250 points is pretty wide, but you can see just by this hourly candle alone, it has already covered about 50% or 60% of the of the stop, I'm sorry, of the TP. Now the other confluence for this was the 4 hour. 4 hour, we had a similar entry. So if you go to the 4 hour time frame, you can see that we had this hourly sell and hourly sell SAR and 4 hour sell SAR. So if I replay this one as well, so this actually also gave me an additional confluence to enter this buy on US 30 as well. So if you go to the 4 hour time frame, same thing, right? Same confluences. So we have rejection from those levels. And then what do? Since we are buying, we need to make sure that we're in a green zone. So before this, like currently you can see that the green zone is overlapping with the red. And I know I did tell you guys that you want to make sure that there's no overlap between the green and the red. But since I'm backtesting, I'm sorry, since I'm doing a bar replay right now, that's when the green zone has already loaded. But when I was entering or when I was checking out even the 4 hour time frame, the green zone and the red zone were not overlapping. So it's only because I'm doing a bar replay that's why it sees that it's overlapping. But you can see it satisfied confluence number 2 as well. We are in a green zone, and number 3 as well. The order blocks are pretty much similar to what was in the 1 hour. So this was a nice confluence. And the other thing as well, if you see SARs that are close by like this again gives you another mental confluence, right? Because for price to break both of this at the same time, it would either have to be like a heavy news event or something of the sort. But right now you can see pretty much how that entry was a nice entry. Now I would consider this an A setup as opposed to an A plus setup. It would have been an A plus setup if we had like a bullish order block around our entry. But even then, right, it satisfied all 3 requirements. So I took off the chart for Bitcoin because again, when I was backtesting or when I was showing you guys my backtest results for last year, BTC did not perform well in the backtest. There were pretty much a lot of losses, a lot of break evens. So I took off BTC from my trading charts for the rejection. So currently, what do we have on the hourly time frame? On the 15-minute time frame, again, I don't trade this strategy on the 15-minute and 30-minute time frame. It doesn't mean that it doesn't work. It's only because I haven't back tested it, and I'm not going to trade something that I haven't back tested just for the sake. So US 30 and gold, I don't even see any entries on the 15-minute or the 30-minute time frame. So there's this hourly trade that I'm in for US 30. Nothing on gold on the hourly. Gold is pretty bullish. On the 4 hour time frame, there's this trade that's running on the 4 hour time frame for US 30, which aligns with my 1 hour time frame entry. Give me 1 second. Let me see gold rejection. Let's see zones. Change this to give me 1 second. I want to see something on this other chart. Okay. I'll move over to the other chart. There's a possible buy on gold that's loading. But anyway, so on the 4 hour, nothing. On the daily time frame, there's no entry for US 30 and for gold. So knowing that, I will switch over to the other chart that has the trend line and SAR rejection, and we'll see if there are any entries that are present there. So I will stop sharing this, and then what I'll do, I'll share the other. I'll share the trend line and SAR. So the trend line and SAR strategy, that's probably the one we'll be seeing on mostly on the live session. So here again, there was an entry on the trend line and SAR rejection for US 30 on the 30-minute time frame. So when I was entering that buy on the based off of the rejection, the SAR rejection, I also had this confluence on US 30 on the 30-minute time frame. So if we do a quick recap of this, just to see why I entered this trade. So if I go ahead and do this, apply this bar replay tool, you can see here we had a rejection support for US30, which means that price rejected off of this support line. And then what zone were we in? If I turn on the zones indicator, we are in a demand zone. So meaning we have a lot of buyers that are sitting there. So here again, what you do, you just wait. Stop loss is below the previous low, and even better, below this structure or weekly bearish low right there. So this one would have given you again a 200-point stop loss and TP for US30. If you wanted it to be right below your previous right around your previous low, maybe you could have gotten away with like 100-point stop loss. However, this one is pretty close to the previous low such that you can get manipulated or faked out. So that's why you want a stop loss that's wide enough, in a sense that if you get stopped out, you don't start saying, oh, I was stop hunted. That's market manipulation. So you want a stop loss that's wide enough such that you avoid all that manipulation, you avoid any quote unquote stop hunting, and then you avoid blaming yourself and saying, oh, I wish I would have doubled my stop loss and TP. And remember, like especially this trend line and SAR rejection strategy, it's the most profitable of my strategies, followed by the other SAR rejection that we are in a trade in. So for this one, you wait for price to come back there. Did we have any opposing order blocks around our entry? No, we didn't have any order blocks, whether it's bullish or bearish. So again, this shows a plus setup. And again, I'm working on a PDF to showcase all of these entries. So this trade is currently running as well for US30. So currently, no buy or sell for US30. Price is in between the trend lines. Only this buy would have been valid, and this buy came before market open. Now, the only thing I do not do for the trend line and SAR strategy is that I do not enter trades before market open. The only trade I would enter before market open is on the hourly time frame. So it would either have to be a trend line and SAR rejection on the hourly time frame, or 4-hour, or an SAR levels rejection on the hourly time frame. Mostly, I don't enter the trend line and SAR rejection strategy before New York open. That is because mostly for this strategy, it does give you sometimes a pretty short or small TP and stop loss. That means the volatility in market open can easily take you out of the position and go back to the direction you're doing. So for me, I found myself remaining profitable, not taking this trend line and SCR rejection entries before market open. And also, I don't want to lose a trade before market open. However, on the hourly and 4-hour time frame, since those are larger time frames, it's going to give me a wide enough TP and stop loss such that I can take that position before market open and still have like a clear mind. So anyway, so this was an entry on the 30-minute for US30. So there are no sales currently on US30 based off of where price is at. For gold, there's a buy. I should have started with this. There's a current buy that's running here. So if we can apply the same analogy, so you're waiting for either a rejection of support or rejection of resistance, and you're waiting for price to close above that level. So in this instance, we had a rejection of support, and US30 is about to hit full TP for that hourly entry. But anyway, we have a rejection support right here, and then you go ahead and ask yourself, trend line rejection. So rejected off of the support trend line, closed above this SAR level. So that's confluence number one. Confluence number two is, if you are buying, we want to see a green zone. We don't want to see an overlap. Now, here, the only red flag with this one is that you see this creeping supply area. So this box that's lagging. So compared to this supply zone all the way up here that's running all the way from left all the way to the right, we have this one that's running maybe midway to where price is at. So that is telling us that supply is creeping in. So it's not really a red flag, but it's telling you that we have possible sellers that are coming into the market. However, I normally just consider either the green zones or red zones that go all the way from the left all the way to the right. So this one would be, I would consider it like a C plus setup. So here what you would have done is it has satisfied that. Do we have any order blocks that are in the way of our entry? No, we do not. And then you would just wait for the retest of the SAR level that's right here, stop loss below the previous low. In this instance, I would maybe put it here. And then here for gold, I would do you can do with like a $5 TP, $5 stop loss here, and then this trade would be like halfway to TP. Now I don't chase trades. If I already missed it, I missed it, and I'm already in that US 30 trade. But this one would be an example of a buy on gold based off of a trend line and SAR rejection. So it's as simple as that. So that's one for gold right there. For any sales on gold, so based off of where gold is, we don't have any sell SAR lines. All the sell SAR lines are all the way down here. So we don't have any sell SAR lines. So we don't have any possible sells on gold based off of that strategy, unless gold now comes back to a downtrend and then we get some entries around this 2780 area. For Bitcoin, let's see, for BTC, nothing for a buy, and you can see how bullish BTC is, and nothing for a sell based off of where price is at. On the hourly time frame, no entries for a buy, no entries for a buy, no entries for a sell. On the 4-hour time frame, no entry whatsoever. Price is especially US 30 is pretty bullish. No entries for a buy, no entries for buy on gold, no entries for buy on BTC, no entries for sells anywhere here. On the daily time frame, what do we have? On the daily time frame, no entries for buys. In any case, we might get either sells for US 30 and gold, because we can see where it's priced at currently for US 30 and gold. Price is on the resistance line. So, but if we go to the sell side, we don't have any sell SARs that are anywhere nearby for US 30, and we don't have any sell SARs that are anywhere nearby for gold. Now, previously, I used to do in conjunction with the trend line and SAR rejection, I used to do trend line and markups rejection. So by trend line and markup rejection, I mean like if we have a rejection of resistance and price closes either above or below an order block, I would enter that. However, last year when I was live testing that or forward testing that, it didn't have a good win rate. So again, for me, my goal is to stick to the strategies that have a higher win rate. As much as some of these strategies, I have to wait for even 2 days before getting an entry. When I do get those entries, they're pretty good entries. So knowing that, so this one is almost hitting TP, this US 30 rejection, trendline and SAR rejection. And for today, I don't, unless even for sales, if US 30 comes up here and then has a rejection and then we close below this area, maybe I would enter a sell on US 30, but that's going to have to be later. For gold, I don't see any sell today unless for some reason gold shoots back down below 2780 and closes below there. But until then, I do not see anything. So today's live session as well is going to be, so this one would be full TP on the trend line and SAR rejection, would be full TP on that one. And I'm about to hit full TP on the other trade. So I'll just go ahead and share my other screen that has the other trade. And yeah, but today's live session, just as of yesterday, will be a pretty short live session. And there you go, full TP on that trade. No drawdown. That's the trades that you're looking for. So I took this on 2 of my accounts. One of them is my main account. The other one is a top, what is it called? I think top 1 trader account. So I made 2 grand on one account and then 1K on the other account. So that's, you know, pretty quick for the day. And that's what you're looking for. And if you guys remember, when I showed you the statistics of last year, I think US 30, if you took all of these setups and you're not missing any of them, I think there was a win rate of 8% for the year. And then for gold, there was a win rate of 15% for the year, assuming you're risking 1% per trade. So again, for these entries, based off of previous experience, I've noticed that you get entries, what time? Sometimes 3 a.m., right before 3, so 3 a.m. Eastern time, sometimes 5 a.m. Eastern time. So remember, since these are hourly entries, right, you probably want to look at the charts every hour. And then the other time that I've noticed a lot of entries and I've missed them, and they're very good entries, the entries that come up 7 a.m. or 8 a.m. Those are, and I think this is the same thing. Yeah, wait, this entry came up at 8. Yeah, 8 a.m., 9 a.m. So the 9 a.m. candle, that's when I entered this trade on US 30. So make sure to look at those time frames. Sometimes even for me, since I'm asleep during London session, I would probably miss the London entries. But you want to start looking at the 1 hour time frame, the 1 hour entries from like 6 a.m. Onwards. So I'd say 6 a.m. to maybe 2 p.m. Eastern time, or 6 a.m. to even 4 p.m. Eastern time. The other times that I've seen this trades hit so much is um, 11 p.m. Eastern time, 8 p.m. Eastern time. So if you're like an Asia session trader, you would be getting a bunch of those entries as well. But anyway, so this one was a nice win for today. A quick 1:1 risk to reward. And you see what I told you guys when I drew up this markup earlier. The reason I wasn't worried too much about where, having such a wide TP on this one is that, yes, I know we do have this daily bearish low order block, daily bearish order block. That's right. Where is it? Daily bearish order block. Uh, ah, daily bearish order block. That's right here. But knowing that, and knowing that we had this hourly buy SAR rejection here, most of the times they will come and most of the times they will, trying to undo this. Okay. This hourly buy right here. So most of the times for these rejections, they'll go past that. So think of these rejection areas as areas where they're going to grab liquidity, or an area where price is targeting before it reverses or before it continues to another direction. So right here, if they're going to keep pushing price up in this instance, guess what they would do? They would close above this hourly buy right here, maybe have a rejection or not, and then keep pushing to the upside, right? So think of these areas as target areas where price would retest before making a move. So either reject or break and continue. So that's one option right there. The other option is that maybe now it's time they've grabbed that liquidity from this hourly buy area, and then they are going to, because if we turn on the zones right now, I'm pretty sure we're in a supply zone, right? So you can see there we're in a supply zone. So maybe, right, they've just grabbed that liquidity there, and they're moving back down, right? So always think of so remember, don't forget, when I trade SCR, in my mind, I'm like stop and reverse. Simple as that. I'm thinking of it as where price is going to go, it's going to stop, and it's going to reverse. Pretty, right, as simple as that. Use these three confluences. If all three confluences do not align, do not take that trade, right? On the other hand, if all three confluences align, however, there's some red flags on confluence number 3 or confluence number 2, either lower your risk or stretch out your TP and stop loss, and then look out for the next area of reversal or of rejection. Give me a second. Mm. Okay. So let's see. So let me know if you guys if there are any other questions. I don't check the YouTube chat, but let me check it today. Uh, um, let's see what we have here. Um, I forgot what screen my YouTube is, or the YouTube stream is. Right. Oh, okay. Oh, so Audrey, you took that buy as well. Nice. Yep. Pretty much that. So yeah, this one was pretty nice. Yesterday, so let's look at gold yesterday. There was a trade. So let's analyze gold. Uh, let's see. Mm, back. Okay. Let's analyze there were some entries for gold yesterday on the trend line. I'm sorry, on the SAR rejection and actually also on the trend line entry on the trend line strategy. So yesterday we did have FOMC. I even forgot about that. FOMC meeting notes at like 2 p.m. And yesterday's FOMC was the crazy one, right? The one that has the FOMC press conference at no FOMC released okay. Yeah, the one that has the release of the rates at 2 p.m. and then the press conference at 2:30. So actually, I'd actually forgotten about that. But yesterday, so let's see what trades. So yesterday is like Tuesday, right? So after the live session yesterday, let's see what entries there were for gold so that we just back test and see how that would have gone. So yesterday, let's see what we had for gold. And again, so keep in mind, so, these strategies, you probably do not want to trade them during heavy news days, especially FOMC. CPI and NFP, I don't mind those, but FOMC is pretty tricky for especially this SAR rejection. And I think also in general for any strategy, when you have those major news event days, you probably want to sit them out because price does not always respect all strategies, but it's pretty much up to you. And some of those news days come up like what? I think we have three heavy news days every month: NFP, FOMC, and CPI, right? So NFP is once a month. FOMC, I think, is what? I don't know if it's quarterly or whatnot, depending on what they're releasing. And then we have CPI, which is every month. So if you just set aside those 3 days out of your month, I mean, you're not going to lose a lot, right? You can, I think most likely you'd be saving your account if you lose those, if you sit out on those days. But for this particular entry right here on this 4 hour buy, you can see price closed above, right? Price closed above that SAR level. So in that point, this area, it didn't satisfy confluence number one. So always remember, confluence number one is what's going to give you that's the gateway. That's what's going to tell you whether you should even consider taking the trade or not. Now here, only if say you're taking a break and continuation entry. However, I told you guys the issue with break and continuation entries is that most of them, especially the ones that happen during New York session, they're probably not going to be valid because you'll be getting entries in buy entries in supply zones and sell entries in demand zones. So that automatically crosses out confluence number two. However, I did tell you guys that for break and continuation entries, look for them during Asia session or before London sessions. You'll get some of them there because break and continuation is it's ideally a continuation pattern or even can be a reversal pattern. So think of it, if price has gone up so high and it needs to come back down, if it creates a sell or it creates an SAR level below the candle and then that area still remains as a supply area, and then that candle closes below that SAR level, then yes, you can take that. But again, you rarely find them during high liquidity sessions. You'll find them during like low liquidity sessions, Asia session, or right before London Open. So here you can see, even for a break and continuation entry, there was nothing here. So let's turn this off, and then let's keep going to see what else is there. So we keep going. Okay, so let's see what's going on here. So here we had this. If we go back, let's see whether this entry was so I do see a buy here. So let's see whether this buy was a valid one or not. So we have creation of this hourly sell or this SAR rejection entry. I'm probably going to take off the sell and buy labels, because here the key thing is the location of the SAR level relative to the candle. If the SAR level is below the candle, you use that as a buy SAR, or you use that as a buy level. So even though it might say a sell here, it doesn't mean. So you'd only use it for a sell if price closes below it, using the first candle it interacts with. So we have a rejection off of this SAR level. Let's see what level zone we are in. We're in a green zone. Okay, so it satisfies confluences number 1 and 2. Perfect. Okay, does it satisfy confluence number 3? No, it does not, because remember, confluence number 3 is make sure that there are if you're buying, make sure that there are no bearish order blocks around your entry, and if you're selling, make sure that there are no bullish order blocks around your entry. This one say would have given you, so let's assume you just take it, you round off to the nearest entry, or to the nearest whole number. Let's see how this one would have gone. You see, right? So that would have ended up in a loss. That's why you need to make sure you're following all these confluences. Sometimes it might seem too good, too good to miss, but then that's where that's why you follow these entries. So let's see what would have happened here. So here, this one was yesterday. So we already know that this trade would have lost. There's a sell entry here. So this one was a nice sell entry. This one was at 5 a.m., right? So this one, we already know it wasn't a valid one. So here, we have a rejection off of this entry right here. We are in order blocks. We are in this hourly bearish order blocks. And if we turn on the zones indicator, we are in a supply zone. So this is an A+ setup. So this is a trade at 5 a.m. this morning. What I would have done is set a pending order here. And then this one would have given me like a $10 stop loss right there. However, for this trade, I think based off of the price movement, it did not get tapped in. And I think, oh, actually, this one was yesterday, right? So it looks like, I think we saw this. Actually, never mind. I'm supposed to start back testing from like after the live session. So actually, never mind, because this was, I remember we were back testing this yesterday. So I want to start back testing after the live session ended yesterday. Okay, so after the live session ended yesterday, which is at 10 a.m., because I think yesterday's live session was like 30 minutes. So 10 a.m., we had this entry here. And then let's see how this one would have gone. So we have a rejection. So the first candle to interact with any SAR level was this 10 a.m. candle. So confluence number 1 has been satisfied. We turn on the zones. We're in a green zone. Perfect. Do we have any order blocks around this area? No, we do not. However, let's see what by default TradingView would have given us as a TP and stop loss. Okay, we would have given us $6. So we round up to the nearest whole number or psychological number, which is a $10 stop loss. Now, you remember when I told you guys that if you're in this instance and there's no order block between your TP and stop loss, right? So here we have a bearish order block. However, towards our stop loss, we have this hourly bullish high and low order block, right? So what did I mentioned to you guys that if you're in this instance, you need to be aware that if there's no order block here, there's there's, I think, 3 possibilities, right? Yes, this is a valid setup. However, price can, yes, tap you in and go straight to TP. That's best case scenario. Okay, what's scenario number 2? Scenario number 2 is that remember, you need to ask yourself, where are they likely to go and pick up liquidity? So they can pick up liquidity, or they can pick up orders either at these rejection levels or at the order blocks. So if they're going to pick up liquidity or entries or orders at the order blocks, what are they going to do? Going to come here, and you see it also lines up with the 200 DMA. So come here before doing this, right? That's possibility number two. Is this favorable for you with a $10 TP and stop loss? No, it's not, because you'd ideally be taken out and possibly price would go in your direction. So knowing that, you have two choices. You can either double your TP and stop loss. So maybe go for a $20 TP, $20 stop loss. So in this instance, you're safe. You're pretty much safe, because if they break this hourly, if price comes and breaks this order blocks right here, this would just mean price is going bearish, right? If they are going to break this at 27.43 and go all the way down to 27.30, that would just mean your analysis was wrong, or your setup did not play out, right? Okay, so let's see how this one would have gone if you did this. But definitely, for if your stop loss was above this hourly bullish high and low order block, that would ideally be a terrible entry for you to take. So you can see this, right? Even with that $20 stop loss on TP, you're safe. Okay, so let's go back and backtest or look at entry number 2. So this one came up yesterday at 11 a.m. and it would have been a nice win for you. This one again would have been an A setup. The reason it wasn't an A plus setup is that we didn't have, say, a bullish order block around our entry. So let's go back. The other option you have is stick with the $10 TP and stop loss. However, instead of setting your pending order here, set your pending order at the bullish order block. Now, for this instance, is price would have just missed you. Uh, Price would have just missed you here. And this was during FOMC. So you can see this candle was a 2 p.m. candle. So this was during FOMC. Is it FOMC? Yeah, this was during FOMC yesterday. Now you can see for this particular trade, you would have missed out on this entry. So it's a decision you need to make. Would you rather increase your TP and stop loss, or would you rather shift your entry lower or higher and risk missing the trade? Now, in my particular case, most of the time I'll just increase my TP and stop loss, because I know for most of these entries, when you're right with that rejection entry, you should be home and dry. And also, even for this one with a $20 TP and stop loss, right? You go ahead and ask yourself, where is my TP? Same thing that we just took, or same thing with this US 30 buy that I took. So my TP is around this rejection level. So it's pretty right. So this one I would have been feeling safe enough knowing that they can come, pursue or pick up orders here and maybe come back down. However, this TP was a bit too high. The distance between the TP and this rejection level was a bit too high. So maybe I would have done $15 TP, $15 stop loss, so that my TP is right there at that rejection level, if that makes sense. But anyway, so that would have been a nice entry yesterday on Go. And I don't know why I didn't. I forgot why I don't even remember why I didn't take this one. But anyway, so there was that entry on gold right there that would have won yesterday. And let's see, we have a rejection area at the top there. So let's see. So this one right here, what would have happened for this trade? So we already know this one would have been one win yesterday. So for this other one, let's go ahead here. Go back here and see whether this would have been a valid entry. So we have that rejection. Okay. We don't have an overlap in the zones, so it looks like a good trade to me. Actually, this would be an A plus setup because exactly we have an hourly bearish order block that's right there. Uh, just a moment. Okay. And then, so let's see, TradingView gives us a default TP and stop loss. So let me take off the zones here. TradingView gives us a default TP and stop loss for $6. We round this up to $10. And yep, looks good to me. Now you can see for this particular trade, this one would have gotten stopped out. Now, for this one, remember what day it was. Yesterday we had FOMC. So for this particular trades, and this trade came up at what, 2 p.m. Yeah, so this one unfortunately would have gotten stopped out. So yesterday, if you took both setups that came up, so one setup you'd have gotten it before FOMC, the other one you'd have gotten it after. So most of the times I would be cautious about taking trades after heavy news, because if price can just choose to go in one direction for hours and hours. So if it's not your direction, then it is right. You'd just be stopped out. But this one would have ended up being a loss yesterday, even having like that $10 TP and stop loss. And then let's see if there was any other setup yesterday. Nope. Actually, yeah, because that trade would have just hit stop loss like this morning at 4 a.m. or something, if this is an hourly time frame. So yeah, so that one would have ended up being a loss. On the 4-hour time frame, for gold, let's see if we had any entry yesterday. 4-hour entries are pretty good because I think it's what? I think is it 6 of them in a day? Something like that. 4-hour entries from like 1 a.m., 5 a.m., 9 a.m., 1 p.m., 5 p.m., and 9 a.m. Yeah, so like six uh six entries. So let's see. So yesterday is Tuesday. No, yesterday was Wednesday. And after around the live session. So this was it. So let's see if we had any 4-hour entries for gold. So 4-hour entries on gold. Let's see here. Nothing so far that I can see. Okay, here we have a possible buy, but price was overlapping. So the green zone and red zones were overlapping because I was thinking of this area right here. However, price was overlapping, and I'm pretty sure this was around FOMC. So I don't even, price became bullish after that. So I don't think price was gonna go back down. Let's see what happened. Yep, so there's nothing on the 4-hour entry on gold yesterday. So that should be pretty much it for the live session today. So again, during the live session, we are just going to be going over, hopefully, we end up getting trades during the live session. However, if we do not end up getting trades, we'll just be calling it a day. So I don't see, even with the trend line and SAR reject. Oh, look at this. So you remember and we saw that a bit too late. So if I share the other screen, the gold buy hit full TP. So if I share this and we do this, you can see gold. You remember that $5 TP and stop loss we talked about for gold? Full TP on that one, right? So if we recap this trade again, so these are the trades again. This trend line and SAR rejection, pretty. This is the strategy that I have the highest win rate with. So if we recap this trade, we had this rejection of support right here. Price rejected and closed above this SAR level. We were in a green zone. As much as we had this zone of suppliers creeping in, the left to right zones, there was normally what I'm looking for a distinction between the supply and demand zone. I'm looking for a white space in between because that is going to tell me I have a high probability of moving from one space to the next in like a fewer time period. But when you have an overlap of supply and demand zones, what that is telling you is that it is possible for you to be stuck in that position for a couple of hours. It is possible for that because you expect a lot of ranging inside that area because you'll have that fight between buyers and sellers. However, if there's a white space or if there's a distinction between the buyers and sellers and if you're entering a buy, that think of it as if you're entering a buy, buyers will ride that until they meet sellers, right? So if there's that distinction between buyers and sellers, then you can be right. You can have a better peace of mind knowing that, okay, I'm riding this to the next supply level. Same thing. If you're entering a sell and you're entering a sell in a supply zone, you'd have a good peace of mind knowing that the area that I'm entering in, there's no buyers, so I'm going to ride this to the next area of demand. So this one would have been a nice one. I had seen it when I was looking on this other chart, but by the time I was bringing this up, the trade was already like 20% in profit. Again, this one would have been a nice no drawdown trade, but anyway, there will always be trades. So I don't, no need to feel bad about missing out on anything. But this one would have been a nice win on gold. And you see this uptrend on gold, both the resistance line and the demand line, or resistance line and support line, are trending to the upside. So that's another thing you want to be cautious about when taking the trend line and SAR rejection entries. If you're taking a sell and the trend line is edging to the upside, you want to be careful because price is showing you that is in an uptrend. Same thing if you're taking a what is it called? If you're taking a buy based off of a rejection of a support line, and that support line is trending to the downside, you need to be careful of that because price is telling you that it's in a downtrend. However, the opposite of that is that if you take a sell when price is trending to the upside, that can be an opportunity to catch the reversal, right? To catch the reversal. However, it's risky, but just weigh your options there. So looking at this, when I'm trading some of these strategies nowadays, I kind of remember like way back when I was starting to trade, and you see prices trending to the upside, and then you're like, okay, let me enter a sell. Price is not going to keep going up, and then I'm pretty sure you guys have experienced the same thing. Like you keep getting stopped out, and then right, you keep entering trades and thinking that you're going to catch the reversal. But then on the other hand, what is, say, quote unquote, smart money doing? They're still pushing price up. So that's why you need to have, for any strategy, it doesn't have to be my strategies. For any strategy, just have your confluences. If the confluence aligns, it doesn't matter whether price is overextended or looks overextended to you. As much as you think price is overextended, price can keep going higher and higher and higher. But anyway, so today was an amazing trading day, but that should be it. If there are any questions, feel free to put them in the Discord. But other than that, I will see you guys tomorrow. All right, guys, peace.